Investors and traders, welcome to the general market chart pattern. Today is 14th of June 2023. It is also the FOMC day where the Federal Reserve came out and they announced their decision about the interest rates and decided not to proceed with hiking the interest rates and left them as they were per their last meeting. So that is in a range for the federal funds rate of between 5% and 5.2%. Uh, and which is historically, given the recent zero rate environment, is still pretty high. But this decision shouldn't come too much of a surprise. Had you watched our video, which we did yesterday about the inflation, where we looked at some key macro data coming out of the Federal Reserve's own system, and we discussed that in the video in depth. I'm going to put a link to that video, which was done yesterday, in the description and also towards the end of this video, so you guys can go and have a look at that. Now, Jay Powell, who's the Federal Reserve's chairman, he also, during the question and answer sessions, if you were watching that, to a reporter, I believe, from Bloomberg, actually mentioned that this should be viewed as more of a skip, and the committee thinks that by the end of the year, there might be two more hikes, which might need to be done. So essentially, the Federal Reserve is still maintaining a stance to increase the interest rates later part of the year, but they are also watching the data that is coming in. Now, how is that going to get reflected into the stock market? This is going to be the topic of this video, which we are going to take a look at right now. And this video is for educational purposes only, and it is not a financial advice. So guys, what we are looking at is the daily chart of S&P 500 E-mini futures. And if you have been a follower or a subscriber to our channel, so thank you very much for watching our videos. This pattern that we are looking at, highlighted as ABCD, shouldn't come as a surprise, because we were looking for a target on the daily chart for this market to reach 4430 level. And in fact, this is what happened after the news, or during that day, today's trading day, market in fact reached that level. Now we'll just move to the weekly chart as well. And in the weekly chart, we have a slightly higher pattern level as well, which is roughly around 4450, and the market came in about 10 points distance to this level as well. So the high reached, according to the trading view data, is 4439 and a half. So our targets that we have been looking for, the market kind of has been reaching those on the daily level. That target has been met. On a weekly chart, 4450 to even 4500, it remains a possibility. However, one thing I would like to point out is, if you have been watching our previous video, that now the sentiment is turning so much bullish, that we should actually be a little bit cautious now, and especially given that our pattern formations have been met. Now, it doesn't mean that from here we're gonna have some sort of sharp move lower, although it could happen. But what we're watching for is the price action over the course of next few trading days and early part of next week, and also that the ABCD patterns, the targets we were watching for, which we were bullish, while the overall sentiment, as the previous video which we had done, but the AAII survey done, was negative. Now it seems to be turning bullish, so we need to be actually more careful, especially our targets have been met. So this is what we are watching in the S&P 500. Let's actually quickly take a look at the Qs, the NQs. The technology stocks are the ones which actually have been leading on the way down in 2022. That's last year. Tech sector was the one which was actually leading the market lower. So the Nasdaq 100 E-mini futures, this is the daily chart, what we are looking at. They were declining rapidly compared to other indices, and now these seem to be leading the way higher, especially on percentage basis. Now here we were initially looking for this 14,350 as a possible strong resistance, but on the ES we also had a higher target as well. So although around this level we did have some sort of a consolidation taking place, but the market momentum is so strong that it's actually moving towards the next level, which is roughly around 15,430, call it for 15,450. So looks like the market is actually going to go and challenge these highs coming from the 29th of March 2020, and actually right here, which is the 78.6% Fibonacci retracement. Let me actually try to show you this. This is what it is, that this is the level which we are watching for here. This is the 78.6% Fibonacci retracement of the all-time highs reached back on the in November of 2021. So quite a while ago, in fact. And look, um, the market has retraced so much of it. From a momentum perspective, this index is pretty strong. The price is above the 20-day moving average, and that is above the 200-day moving average, the long-term average. We'll take a look at it to study the momentum. So from a momentum perspective, it is pretty strong, but again, it is also reaching the kind of levels that we would like to look for. So that's what we're watching. 15,430 to 15,450 possible in the next few trading days. That's what we are looking at. Now, let's take a look at the small caps, which is the Russell. So this is the Russell, and here, after forming this very nice ABCD pattern formation back in the February, early part of this year, February 2023, the market just went lower because that was still when the Federal Reserve was hiking rates. In fact, last month, this is what they have done, and the small caps seem to be the smaller companies. They have borrowing requirements, etc. So if the interest rates are rising, this means that the debt service is also rising, which could be a strain on the cash flows. This is why probably that the it had a pretty nice downward move. However, what we are looking at now is, look, there is a nice support coming in this form of trend line here. This is like higher highs, higher lows, and again, the key level that we were watching for was 1852. Price has been above that, so that's kind of a breakout. The momentum is turning positive because the 20-day moving average is above the 200, although it needs to be sustained. But a possibility remains that most of the breakouts actually they fail, but this one has been going on for a little bit longer, and then what happens is that the price comes back into the trading range. So this, if you look at this, was a lot of consolidation in trading range. So the possibility remains that for example, because of the key patterns or the levels being reached in the ES and also the NQs, that there, if there is some sort of a pullback, perhaps it could pull back to about 1785. We'll have to watch that, when that happens. But look at the price action in the E-mini S&P 500 E-mini contract, which closed positive. The NQ 100, the Nasdaq 100, it closed positive. This one did not. So this is something which I wanted to point out to you guys. Let's take a look at the Dow Jones futures. So these are the YM and the E-mini Dow Jones futures daily chart. Again, it broke above this swing high here, which in fact, is a good how shall I say it, a good development. But it also means that the on the left hand side, if you look at that, it's going and testing the top of the range. If now there are chance there is, like, because of taking the swing high out, excuse me, the ABCD pattern can in fact now, there's a possibility that it's going to go and challenge these highs. However, just because where the NQs are, which have been leading, and the 15,450 level that we are watching for, and also the pattern completion in the ES, we will have to watch the price action in this one really carefully as well. So guys, this is what we are watching for in terms of the key US stock market indices in the United States, given the in the light of the decision taken by the Federal Reserve today. While we are at it, let's quickly take a look at the bond market. So the bond market is actually, much larger than the US stock markets. So what we are looking at is the daily chart of T-bond futures. These are also the long bond, also known as the long bond futures, because their duration is 30 years. And here Something very interesting is that this support, which is around 125, this is the 78.6% Fibonacci retracement of this entire move high, in the highlighted in the shaded area. I'm just gonna bring it a little bit below like this to make it easier to see. It's being held so far, thus far, so that's good. Breaking below this is not gonna be that good of a sign. And also from a seasonality perspective, we are in the middle of the June, and this is also a time when this market actually begins to rally as well. Those rallies could be short-lived, but the seasonality becomes positive during these time of the year, in the month of June, for the this market. So that's so it closed as a positive candle. It's holding the, if you look on the left hand side, is holding the support level, and it's above the 125, which is 78.6% Fibonacci retracement. That's a pretty good sign that maybe, um, the prices might move higher. And in fact, what it means is yields moving lower. We are going to move to the note market. So this is the chart of the 10-year Treasury note future, daily chart. Um, a little slightly different picture to the 30-year long bond futures, but essentially what we are looking at is basically price being held here, and then this could be actually in fact a double bottom here. It's going to be a micro double bottom, but the key thing is that the price has been held between the 61.8% Fibonacci retracement and 78.6% Fibonacci retracement. So it's like kind of a how shall we put it, a support zone. And there's going to be maybe another thing which I did not look at. So maybe there is some expansion here as well. So there we go. If we look at this, let me actually make it a little bit clear, easier to see. There is in fact also the 101 and 31 seconds, which also comes really close to the 78.6% Fibonacci retracement. So pretty good support available around here. In fact, just like we discussed for the long bond futures chart, this is going to be a positive development if the prices begins to move higher, because of also the seasonality available here around this time of the year, in the month of June, around these dates. Higher prices means lower yields, which translate into lower interest rates, for example. So guys, this is what we are watching in the key US stock indices, and also in the bond market, in the United States. If you like our analysis, how we look at these markets, how we you make use of the pattern recognition and Fibonacci ratios for retracements, price projections, and also for expansions, then please do subscribe to the channel. And if you found this video of educational value, then please do not hesitate to hit that like button. In fact, just gives me an indication that people actually find the videos of educational value, and it just encourages me to keep on producing more videos for you guys for educational purposes. Thank you very much. Thank you for watching. Good luck and good trading.